Thank you, Sumit, distinguished guests, our media partners, my dear colleagues, and all those who are tuned in. A warm welcome to each one of you to the ninth edition of Voyage, Aditya Birla Sun Life Mutual Fund Annual Investment Conclave. Voyage, our flagship event, has become a brand in itself. Looking back at our journey, we started with a humble gathering of 500 participants in the year 2014, which has now spread its reach to beyond 10 million digital audiences from across the world with the help of our media partner, ET Now. Let me take this opportunity to thank each one of you for taking your time out to attend our signature event and for your continued support and association with Aditya Birla Sun Life Mutual Fund. At the end of 2021, the world economy was on the track of recovery. Governments, central banks, and world institutions around the world, through calculated policy measures, had navigated the rough waters of the last couple of years quite successfully. Businesses and people had adapted to a new normal. Old supply chains were being restored while new supply chains were being established. Just as everything was going back on track, the unexpected geopolitical tensions between Russia and Ukraine have threatened to derail the global economy, which has now resulted in the uncertainty of markets and also global economic recovery. These tensions have led to disruptions in global supply chains, which have led to supply chains constraints and therefore having an impact on inflation. Markets, of course, have factored in the geopolitical development and also factored in the possibility of resolution sooner as it can be seen from the recovery of the global equity market. And the commodity prices should also ease up once the tensions de-escalate. There is a possibility that we may see the world economy move from globalization to regionalization, with the countries looking at alternate sources of resources and geopolitical playing a greater role in the shaping the way forward. As we all have witnessed, historically, the Sensex has displayed cyclical tendencies between 3-year time period, but for the overall trend for the past 20 years has been observed to be upward. India has continued to display resilience despite the happenings in the global economy. Domestic investors continue to hold faith in the Indian market through mutual funds as well as the direct equity. This is a great comforting factor towards market stability. To help our investors and distributors understand the economy and markets and make sound investment decisions, we at Aditya Birla Sun Life Mutual Fund, through our flagship annual event, Investment Voyage Conclave, wish to provide insight on the economy and the market outlook by inviting industry experts to share their rich and unique knowledge and experience. Like every year, this year too, we have an exciting lineup of speakers and panelists comprising of policymakers, global industry experts, thought leaders, along with our team to share their thoughts and views on India navigating with resilience. We are optimistic and bullish on the growth prospects of the Indian economy and the Indian market in general. In this edition of Voyage, we want to showcase our resilience through the tough times we have faced in the last 3 years, and the optimism we as a fund house has on the growth potential, opportunities, and trends of the Indian economy and the domestic market. I am sure the factors that will drive the growth of the economy will be elaborated on by our CIO Mahesh Patil, along with our co-heads equity and fixed income over the course of the event. Let me now apprise you of the latest developments in the mutual fund industry. The mutual fund assets base, as is known, has grown and reached a total size of 38 lakh crore average assets under management as of December 2021. The industry has attained scale over the last few years due to increased financial awareness and higher digital penetration through our business partners. The retail asset base of the industry has crossed 20.86 lakh crore. The monthly SIP book for the industry stands at 11,305 crores with almost 4.9 crore live SIPs. The total outstanding AUM under SIP is close to 5.65 lakh crore as of December 2021. The total folio account of the industry is close to about 12.09 crores. While this is indeed remarkable in the global context, mutual fund industry in India has still a long way to go. There lies a tremendous untapped potential for mutual funds in India. As of today, Indian mutual fund investor base comprises less than 2% of the total Indian population. When compared to the bank deposit base, approximately 167 lakh crore as of December 31st, 2021, The Indian mutual fund asset base constitutes just about 23% of the overall banking deposit base. Mutual funds are an important financial intermediary in developed economies. In fact, US mutual fund industry is as big as US banking industry, which is again well-known fact to most of us. Whereas in India, the mutual fund industry is still maturing when compared with the banking industry. With greater financial inclusion and awareness of mutual funds rising, we should see the investor base and AUM base increase rapidly in the next few years. From our past experiences, both good and bad, and make course corrections wherever they are needed in our thought process, business operation, and investment executions. As I look back, since the first voyage, we as Aditya Birla Mutual Fund have grown steadily in terms of asset base, customer base, distributor base, and market expansion, digital adaptations, and penetration of B30 market as part of our growth drive. The next few minutes, let me take you through the journey of our growth story so far. Our overall AUM has increased from 89,000 crores in the year March 2014 to about 2.99 crore as on December 2021, a rise of 3.3 times and absolute growth of 233%. Our equity average asset management has gone up by 10 times from 11,735 crores in the year 2014 in the month of March to 1,21,000 crores in the month of December 2021 at an absolute growth of 939%. As a result of this, our overall equity AUM now stands at 41% of our overall assets base. Our debt average assets management stands at 1,76,000 crores as on December 2021 and has gone up by 2.3 times from 77,000 crores in March 2014 with an absolute growth of 127%. In fact, our active customer base folios has crossed 75 lakhs. In the year 2014, we were present in 96 locations. Currently, we are present in 218 locations. We still have a long way to go. To simplify our product offerings and meet investor needs, we have taken a solution-based approach in categorizing our product under the first solution bucket, that is savings, nothing but liquid schemes, income as a category, wealth as a category, and tax as a category. These four solution buckets are further supported by the value-added products and value-added services such as Value STP, SWP, and CSIP, among others. As part of our continuous endeavor to serve our customers and partners, we also introduced the virtual relationship manager model and service to sales model in the current year. Let me now highlight our strategy that has led to our growth in the past 9 years. There are 3 P's which we believe are important, namely people, performance, and processes, along with the 3 C's, which is nothing but clarity and commitment and consistency, with a clear motto of making it win-win-win for our investors, distributors, and the whole ecosystems. Our continuous endeavor to increase our geopolitical footprints has done well for us. We have penetrated and deepened our reach across locations through various modes of presence, such as our branches, hub locations, building our emerging market channels. Our planned strategy is to eventually be present and operational in all the 543 member of parliament locations. This is part of our broader objective of financial inclusion of the country that will help in nation building. Our strategy of continuous engagement with valued investors and partners has enhanced our mind share. Consciously, we keep stepping up our engagement efforts year after year. We take immense pride and in the work we do in the areas of financial literacy and awareness as part of our investor education initiatives. This year, we have even introduced for her targeting the women investors in the country an exclusive initiatives that we have rolled out as part of our financial awareness increase across the country. With the acceleration in the adoption of digital technology across all aspects of life, we too have embraced technology and have been at the forefront in upgrading and updating our digital assets in order to widen our customer base across different parts of the country. We continuously strive to provide best investment experience. I am proud to say that we have the best talent to manage the money of our investors. I'm also happy to say that we have been a consistent performer and delivered better performance in comparison to our large peers in the industry. While delivering consistent investment performance, we're also looking to the ever-evolving need of the investors by increasing our product offering in all categories. In our efforts to serve our investors better, we have stepped up our offerings in the alternate strategy segment of our business by creating differential product across the passives, PMS, and AIF categories. We expect the passive category to grow exponentially, while at the same time, we see actively managed funds and passively managed funds will coexist to cater to the different needs of the investors and different type of distributors, and therefore providing a greater solution to the customers. I'm happy to share that our passive AUM has grown by more than 3 times from 1,692 crores in the month of March 2021 to close to about 6,000 crores as of December 2021. Winning awards and recognition from external reputed agencies is a validation of our efforts and dedication. I'm sure all of you will feel happy about the recognition that we get from the external world. Our investor education team won the Asia Asset Management Award for the best fund house for the investor education program in the year 2022 for the 4th time in a row and 5th time in the last 6 years for the innovative approach to investor education and distributor development. Our digital and IT team has won the Asia Asset Management Award for the best fintech innovation in the year 2022 for building a robust digital interface and infrastructure. As we move into the new financial year 2020-23, I am hopeful and optimistic about the growth story for the mutual fund industry and the domestic market and the broad economy as a whole. The Union Budget, which was released in the month of February, announced by our Honorable Finance Minister, Srimati Nirmala Sitharaman, in the month of February, has been well received by the market. It has clearly given a lot of emphasis on the need for investment-led growth by way of increasing the capital expenditure quite substantially. In addition to this, encouraging state governments to undertake more investments, the development of the state infrastructure by keeping higher allocation towards state budget is also a very good move. The focus is clearly to create supply-side linkages and develop the economy in a sustainable manner by stimulating local demand. This budget is not one of those typical one-year plans, but attempts to lay the foundation for the next 25 years. On the basis of this, India is poised to become a $5 trillion economy, thanks to the efforts and policy decisions of the government and the policymakers. From an equity market point of view, the budget has set the tone for a higher growth through higher spending, which would drive profitability. Many mid and small-sized companies would get benefit from the urban and digital focus. The Reserve Bank of India governor even promised to do whatever it takes and what is necessary to support the economy. The monetary policy has been accommodative in its stance since the pandemic and has kept the policy rates unchanged for the 10th time in a row. Of course, the recent policy we'll have to just see as to how the policymakers will start thinking, especially in the emerging world. The RBI has said many number of times, continued policy support is warranted for a durable and broad-based recovery. The government and RBI will work together to support the economy and ensure the economic growth with price stability, despite there will be a marginal rise in interest rates. The Indian economy continues to remain resilient in comparison to other emerging economies, including India. The happenings on the global stage have impacted equity markets around the world. The recent market volatility is, in fact, the reflection of these dynamics. The last 12 months, FAs have been the net sellers in the Indian market, which is again known to all of us, but domestic investors continue to hold faith in the Indian equity market. This is a great comforting factor towards market stability. While the ongoing geopolitical situation continues to cause uncertainty, it can't go on for too long. Any resolution that is arrived at will sharply change the economic outlook and the result in the normalizing of commodity prices and the growth expectations. On the fixed income side, the market will mainly be driven by federal policy and domestic monetary policy actions. With the expectation of rate hikes in the near future, we expect to see a significant pickup in even credit demand, which will result in boosting the economic revival. In addition, higher tax collection of both direct taxes and GST on the back of better compliance should help the fiscal as we move forward. This gives us ample reasons to be bullish on India's longer-term growth and its prospects to emerge as a strong winner among the rest of the global economies, and at the same time gives a business an opportunity to grow and navigate through market cycles. We at Aditya Birla Mutual Fund are extremely committed to participate in India's growth story, while also being a thought leader and large player in the Indian mutual fund industry space. While market goes through cycles, if one carries a longer-term focus on wealth creation and maintains the right asset allocation without being influenced by the short-term fluctuations, there is a meaningful gain to be made from mutual fund investments. It will continue to be one of the best vehicles to invest in the market, providing a comprehensive solution to investor needs based on the financial goals and risk appetite. Asset allocation is an important investment mantra at any given point of time. The solution offered by us under 4 buckets, savings, income, wealth creations, and tax savings, are designed to take care of the asset allocation needs of the customers. Investors, of course, have to keep in mind the long-term investing as a guiding principle while building their equity portfolio. We strongly advocate having a good mix of large cap funds, flexi cap funds, and balanced advantage in the portfolio is key to bring in success in the overall portfolio action. The Voyage conference over the next 2 days will give you more insight into the economy and the investment scenario in general. As I mentioned earlier, all the speakers are subject matter experts who have rich expertise, rich experience in the respective field. I am sure the sessions will provide a valuable insights. I also extend my compliments to Itinao, our media partner, and my special thanks to Nikunj Dalmia and his team, who has been a big advocate of the mutual fund industry space. He has been a tremendous support in framing the flow and the extending coverage of the conference. I would like to take this opportunity to say that we will always remain humble and stay committed to our investors and partners and shareholders and deliver commendable performance to be a leader in the industry in managing assets and the risk, expand the market and deepen financial institutions in the country. I wish all of you and your families good health and happiness. Let me now conclude with a quote by Sri Ramakrishna Paramahamsa. Always look at how far you have come rather than how far you have to go. Always count your blessings, not what you are missing. With this, I'll end and wish all the success and thank you.